What's up, guys? Welcome back to Mark's Stock Review. Hope you're doing well. This video is going to be on VG Acquisition Corp. I'm going to very briefly go over my recent trades, their objectives and criteria, some of their possible merger targets, and then my final take. I'll keep this video as brief as possible to respect your time, so if you do find it helpful, I'd really appreciate a thumbs up. That said, let's get right into it. And full disclosure, I do own a very small position in VGAC. I did buy some shares as I was researching for the video. I do plan on buying more shares as well as BTAQ and PSTH. And as you can see here, I did buy some more PSTH and I also sold almost all of my QuantumScape. I wanted to make sure I banked my profits as the price continues to slide. And the same goes for Canoe stock. I sold to lock in profits. So VGAC's founder and leader is Richard Branson. However, we should assume that he's going to have a split focus. His management team will be doing most of the operations. And surprisingly, there's still lots of hype on this SPAC despite no merger target, and it's also still very close to the initial offer price. Listed here is their focus. It's basically everything, so it's not specific whatsoever. So that tells me they're going to leave their options open as far as picking a potential merger target. And then coming up here is their target criteria, which again is fairly ambiguous. If you look at the bottom where it says attractive returns, is that current attractive returns or is that future attractive returns? You just don't know. And this is not a bad thing whatsoever. However, it is a sharp contrast to my last video on PSTH where Bill Ackman said that he was definitely going to go after a mature unicorn. Two solid things that I did find, however, are they're going to pick a business that quote unquote lifts experiences out of the ordinary, and they're going to invest in a sector that they already have expertise in. One of the merger targets is, of course, Hyperloop. They actually showed progress on November 8th by having passengers safely travel on the Hyperloop, albeit it was only at a fraction of the speed of the intended 1,000 kilometers per hour. And they were independently validated by a third party, so that was encouraging to read. And so Hyperloop doesn't exactly check off the boxes with the target criteria. However, it does go with lifting experiences out of the ordinary, and it could benefit from their brand and global resources, so one could make a case for this merger. Now let's move on to a more likely merger, Envision, and let me start off by saying it's a Chinese company. Some people may not be aware of that. Envision is broken up into several divisions. I'm going to go over them each very briefly. Envision Energy designs, sells, and operates smart wind turbines. They're also working on products to control and manage energy more reliable and efficiently via producing, storing, and consuming energy from power grids. Their Envision AESC division involves their AIoT-powered batteries. They're working on digitizing battery use via data collections and artificial intelligence to analyze each mechanism for failure and to predict battery life under different working conditions. And moving on to Envision Digital, it's quote-unquote the world's largest AIoT operating system, which includes renewable energy, software systems, and grid integrations, as well as solar management. And they're further diversified with their Envision Ventures, which includes investments in companies such as ChargePoint. And now arguably their most exciting division is their Virgin Racing formula, quote-unquote the race against climate change. Envision is one of the founding and leading teams in the FIA Formula E Championship, which is an electric street racing series and one of the world's first fully electric international single-seater category. They compete in cities such as London, Paris, and Rome. But most importantly for investors, it's a platform to act as a catalyst for sustainable mobility solutions for EV design, functionality, and experience for everyday car users. Next, I'm going to lay out 3 reasons why I believe Envision is an attractive merger target. Reason number 1, Envision's ties to China is going to allow Branson to compete with Elon Musk in China. He made that publicly that he wants to compete with Tesla, and taking Envision public would be the logical next step. Reason number 2 is that VGAC would be diversifying with Envision. They have multiple green initiatives, so they can allocate funds to wherever is most profitable. And reason number 3, merging with Envision checks all the objective criteria, albeit loosely. My final take is going to be 3 reasons why I bought VGAC. The first one's going to be an example from QuantumScape. Earlier this week, I heard on CNBC Halftime Show that one of the stock traders had never heard of QuantumScape until last week, until a friend had told him how much money he had made. The point being that I believe that SPACs in general, and especially ones that have no merger target, are essentially being ignored by professional traders and the mainstream investor community. And for me, it presents a rare opportunity for investors willing to withstand short-term volatility to make a ton of money. Reason number 2, VGAC is close to the initial offering price. And reason number 3, I like the possibility of taking over Envision's diversity. That's going to provide a wide net to attract institutional investors. That does it for the video on VGAC. I hope you guys found it helpful. If you did, a thumbs up would be greatly appreciated. Let me know if there's any other SPACs you guys want me to talk about in the comment section below. Have a great rest of your day, and I'll be talking to you soon. Take care.